Working Man Investor. Today's video, my 3 rules of finance. So there's 3 rules of money that I strongly believe in. 1, money flows to the investors, those that have money left over at the end of the month and buy assets. Over time, those assets go up in value if invested correctly, and you can build wealth. Money is going to always flow to you if you invest. If you learn to invest, if you study investing, you will make money over the long haul, provided you keep your bad debt down, like credit cards, car payments, a mortgage on a home that you really can't afford, and you have money left over at the end of the month to put into an asset. You will build wealth over time. And as you build wealth over time, what does money do? Money protects your family, whether we like it or not. Whether we want to view everybody who wants money as greedy or not, the bottom line is, when you're broke and your family's starving or your kid can't go to college because you can't afford it, you're going to wish you took that attitude. So you want to view money and investing as a way to protect your family. I know guys that have multiple firearms in their house and they have it to protect their family, and that's fine. This isn't a political statement. But those same people are living paycheck to paycheck because every extra dollar they get, rather than invest it, they go out and buy a liability. They'll buy a 30th gun. They'll buy a new car before they pay off the old one. They'll do all that, and they've got all these guns within their house, and they're ready to die. They're good people. They're ready to die, to grab that gun if somebody breaks in and die to protect their family, because they love their family that much that their life is not as meaningful as their family's safety. But then they leave their family out on an island financially, so they lose their job, and then they lose their home, and then they can't afford to feed their people. And you can't eat those bullets. Yeah, you can sell the guns for money, but that's not ideal. So I always stress money's going to flow to the investor. So it's okay to buy some things you love. If you love whatever it is, whatever your hobby is, whatever your favorite thing is, whether it's go to professional sporting events, it's okay to do that. And you should do that. But you want to make sure you have some kind of money at the end of every month to put into an asset, some type of investment. So that's the first rule. The second rule is inflation can build wealth. We've been hearing about inflation really for the past 5-6 years since COVID, and there's a lot of people understandably nervous about that. What I want you to understand about inflation is it can help you build wealth. If you own rental properties, if you own a personal home, I don't like to use the personal home as a wealth building idea. I view a personal home more as a liability, as an asset, just simply because you pay your mortgage on it and it doesn't put any money in your pocket, rather. And it does build up equity, but it doesn't cash flow for you. But rental properties do. But if you own rental properties, if you own Bitcoin, gold, silver, an ETF, an index fund like the S&P 500, anything like that, as inflation rips higher, those assets go higher too. As those assets go higher, your net worth expands, your wealth builds. You can use inflation as a weapon. You can weaponize it to build wealth and to protect your family and yourself. But there again, it goes back to rule number 1. Money flows to the investor. You have to have money at the end of the month to put into one of these assets or a couple of these assets. And the last one, and people don't understand this, tax code benefits the investor, not the employee. So the different tax codes, like I own real estate. Real estate gives a lot of nice tax returns at the end of the year. My rental properties give me depreciation, things like that. So when you're investing in things like that, you begin to use the tax code in your favor to again build wealth. Now, why do the tax codes favor those? The government wants people investing. They want you to buy rental properties. They want you to fix them up. When you fix them up, you hire people often to fix them up. If you're fixing it up yourself, you're still going into stores and buying material. All this spending of money creates jobs. If you get millions of American citizens investing in different asset classes, it will increase jobs. It increases employment. It stimulates the economy. As the economy grows, what happens? We have more people at work, more taxes are collected by the government. This is what Trump's trying to do with the big, beautiful bill. Whether it's going to work or not, we'll see. I don't know, but he wants to grow the economy. When you grow the economy, the tax base expands. All right, and that's one of the ways to pay down the deficit. That's the best way to pay down the deficit that you're starting to hear a lot about, being 37 trillion in debt. If you pay down the deficit any other way, you have to, one, cut spending by the government. There have been debates on whether or not they're doing that. I don't really know if they are, but you saw DOGE, which didn't work out the way I had hoped, and many other people had hoped, and cut trillions like they hoped to cut billions. But when government cuts spending, that right there can cause a recession because the government's your biggest spender in the economy, and one person's spending is another person's income. Other way is to raise taxes. Cut spending and raise taxes is a way to take care of the deficit. When you do that, you're almost guaranteed a recession. So you want to grow the economy to grow yourself out of debt. One way to do that is to write the tax code to try to encourage the citizens to be aggressive with their extra income at the end of the month and invest. So I'm just a working man investor, like I say. I'll give you some examples through my history through real estate. I started this back in about 2018. I had a condo. I did some of the work myself. And then what did I do? I got to stuff that was beyond my skill set. I hired a contractor. I created a job, a temporary job, yes, but I still created a job. So then once we fixed this beat up condo and made it really nice, what did I do? I rented it out. I provided housing at a fair market price. I managed it myself for 14 months, had really good tenants. They moved out. At that point, I was looking to expand. I wanted to free myself up, so I hired a property manager, created a job. So he took on my property, and then I bought a fourplex. What did I do with that fourplex? I didn't have to do any work to it because it was already turnkey, already fixed up, but I turned it over to my property manager. As my property manager expanded off of normal, everyday mom and pop investors like me, what did he do? He hired a couple of repair people. Okay, what did that do? That created good middle income jobs. And what did it also do? It provided a really good service to us because a property manager, here's a tip for anybody looking to buy real estate. I believe when you find a property manager, you want to find somebody that has an in-house repair team, a couple of repair guys, because what they'll do is they can go out and do basic repairs for you in your units, and it's going to be less expensive for you because they don't have to bring in a contractor. They're using their people. So I found that to be a really good bonus with my property manager. But there again, he's creating jobs. And then what do I do if I go on and I still have money left over at the end of the month, because I've kept my deficits or my debts down. Any extra money, I'll put it into an ETF, an index fund, S&P index fund. As I put that money in every month, me and obviously millions of other people, but still I'm a part of that. As you're buying shares, you're creating demand. You're helping to move the S&P 500 up. What does that do? That expands people's 401ks. When people look at their 401ks, even if they're struggling, if the 401k is going up, they start to feel better about themselves. So these are just examples of why investing is so important. And as you're doing this, as I'm doing this, as inflation blew up over the past 5 years, my wife and I didn't fall further behind. We got wealthier. My fourplex went up in value. My condo went up in value. My gold and silver went up in value. I got some statistics here. This is why in the past 5 years, the average income has only grown by 18%, but the average inflation rate is 23%. Therefore, people are negative 5%. Now, that's horrible for anybody who doesn't have assets. But if you have assets, the S&P 500 has grown by 80%. And a lot of that's because of inflation. As prices go up, businesses make more money. Who benefits from a business making more money? Everybody says the CEO. Yeah, but investors, you and me, and anybody can do that. So, and then other stats from 70, a new home has grown by 1,200%. A household income has grown by 600%, and the S&P 500 has grown by 4,000%. That's how powerful investing is. So you really need to have money at the end of the month to invest, and it will bring money to you. Now, you need to study what you're investing in, and you need to know. You don't want to just blindly throw money into things. So you do need to study. You need to read books. You need to watch podcasts. You can subscribe and like my channel. I talk about a lot of this stuff. Hopefully I'm helping people out there. That's my goal of this channel. But just remember those three rules. Money will flow to you if you're an investor. You have to be patient. You can't buy a stock tomorrow and expect to be $1 million by the end of the week. That's not how this works. In inflation, you don't have to be afraid of it. Now, if you owe more than you make at the end of the month, you're in trouble. You're going to have to look where you can cut back on what you have around the house that you could sell to put towards your debt, to maybe pay off a credit card to bring down your monthly debt. But once you get to the point where you have money left over at the end of the month and you have an emergency fund, start to think of inflation as a way to build your wealth. Weaponize it by buying assets, because assets go higher. Oh, and then understand this tax code. If you have somebody who does your taxes and you pay them for the service every year, ask them. Just say, hey, how do I use the tax code to my benefit? I know that the tax code is supposed to help investors because we can create jobs by going out and doing things. Can you tell me what exactly that means? And have him break down depreciation and things like that for you. Then take it and study it and figure out, okay, this is really, really interesting. I'd like to move into that and find your niche that way as an investor. So those are just some things that have helped me. I hope it helps you. It's what I got for you today. Working man investor. Keep grinding, people.